U.S. dollar index daily forecast August 23rd, FXEmpire.com. You can see that the dollar index had a pretty rough day on Wednesday as the Federal Reserve minutes released from last month's meeting suggested that perhaps more of the Fed members and the voting members were thinking about easing than was currently anticipated. Because of this, the dollar did get sold off a bit. However, we stopped at the 81.50 level, which is the beginning of the gap down to 81. A minor gap, but it is a gap nonetheless. And typically these do offer support. So, having said that, you can see that there's much more risk to the upside than there is the downside. And in fact, we are willing to put on a very small position to the upside just to kind of see what happens. Certainly, the risk to reward ratio is almost a given at that point. If we get stopped out and a daily close sub 81, then we just simply would reverse the trade because it should have much farther to go. However, looking at this, one cannot help but understand that although we felt like this, we did stay relatively calm. We only lost 0.46 for the day as far as percentage is concerned, and as such, the formula is essentially what needs to be paid attention to. The euro didn't exactly skyrocket against the dollar, and it's just a tick over 40% of the mix of the U.S. dollar index. So, having said that, it does look like the dollar is going to be pretty resilient, even in the threatening words of the Federal Reserve as far as putting out more quantitative easing. So, having said that, we think that this more than likely will rise, maybe go back up to 84. It looks more or less sideways. And if it doesn't, then we'll know. It'll be obvious. We'll take our small loss and then try to concentrate on making a bigger gain to the downside.